Hello and welcome, clients as well as board members and managers in our network, to today's webinar on how to read financial reports. My name is Russell Munns and I'm the founder and CEO of Community Financials. I'll be serving as your moderator for today. At Community Financials, all we do is monthly financial reporting for homeowners associations, condo communities, and other types of community associations all around the country. We don't do bookkeeping for businesses or doctor's offices or of any other type, only communities like yours. Our team is solely focused on financial reporting for this unique niche. Financial reports are an amazing tool to help you manage your community. As a board member, you have a fiduciary responsibility to the rest of the owners. And what that means is to loyally provide care over the monies of the other homeowners and over the assets of the community. Along with good financial controls, including procedures and transparency, financial reports provide an important tool to help you provide this fiduciary oversight. I've studied over 20 cases of fraud and embezzlement by board members, on-site staff, and community management companies. In most cases, if other board members were reviewing the financial reports, these crimes could have been avoided or confronted before they became very large dollar amounts. If you pay attention, you can avoid the possibility of that happening on your watch. But more likely than spotting fraud is to use the reports to stay in control of your spending and make sure you're collecting the funds that you budgeted for. The best practice is to receive financial reports monthly, typically to 3 to 4 weeks after the end of the month. The importance of monthly reports is to allow you to spot variances and red flags in your income or expenses quickly and give you time to investigate and make adjustments throughout the year. I've been in this industry for over 20 years, and the bigger problem is that even if board members receive financial reports monthly, many don't read them. I believe this is mostly due to a lack of time a volunteer has and being overwhelmed by all the reports. It's my opinion that many management companies do a disservice to board members by providing too much information in a 1 to 2 inch stack of financial reports to review. By doing this, they're either trying to be impressive or purposely overwhelm a board. But the financial report package doesn't have to be overwhelming. In today's 45-minute to an hour webinar, we're going to help solve those two problems, provide a handful of reports to focus on if you have limited time, and help remove that feeling of overwhelm. Joining me today is Tanya Wilson, our board advisor who assists boards with operational issues and education. In her previous job, she was a senior manager at a large management company in Arizona and trained, coached, and supervised a large stable of community managers. Also joining me is Jennifer Morgan, who is one of our senior client managers, which means she helps communicate accounting items into more easily understandable terms for our clients. Jennifer has an accounting degree and an MBA and is here to help with your more technical questions. Now, I hope you're ready to take notes, but like all our webinars, we're recording this session, so it will be available on the Community Financials YouTube channel for future playback. For everyone who stays to the end and fills out our short end of session survey, we'll send some items from today's program. Those materials will contain answers to all the questions that were asked, even the ones we didn't have time to answer today. When you're filling out that survey, make sure you add some comments about what you'd like to hear in future webinars. Your input helps shape our presentations and create new programs. So, as there are a large number of participants today, your microphone is muted. However, you can answer your questions at any time by typing them into the question or chat window at the bottom of your control panel. During the webinar, Jennifer will be monitoring the questions to see if we can answer them during the presentation. And if not, we'll get through as many as time allows during our Q&A session at the end of the webinar. Give the chat window a try now. I see that some have already been doing it. And put your board position, or if you're a manager, and what state you're from. All right. Great. I start to see some of the, hi, Kurt from Lyons, Colorado. Bob in Rhode Island. How are you doing? Kathy in California, a manager in Utah, Marie from Vermont. Great to see everybody. And it's great to see so many people. And we love being able to work with communities all around the country. So I'm glad that everybody's found the chat window. So now I'd like to turn the floor over to Tanya Wilson.
Thanks, Russell. And hello, everyone. Thank you for joining us today. Today, we will be discussing financials that you receive in your monthly financial report. That will include your balance sheet, your comprehensive income and expense report, your AR aging report, the bank reconciliation report, bank statements, general ledgers, and check detail report. We will also be going over your year-end reports. And then, of course, we will have your question and answers that we can go over with you. Welcome to Community Financial Board Training. Today, we will be covering Financial 101. We are excited to have you join us today and hope that the information we provide will be helpful to you. If you have any questions, please message us during this presentation or email us afterwards. We will be reviewing the 4 best financial reports that Community Financial has to offer each board. Those reports are the balance sheet, the comprehensive income and expense report, age delinquency, and bank reconciliation report. These reports will simplify your life and take less time for you to get a picture of your association's financial health. As a board member, you have a fiduciary responsibility to exercise due care and diligence when overseeing the community and its funds. The following reports are vital tools for protection of the association's assets, control, and planning. We will be going over each of these reports in detail. This is a sample of a balance sheet you receive in your monthly financials. The top portion lists your assets and the bottom is your liabilities and equities that show how your assets are broken down. A balance sheet is an important part of the financial package. It tells where the association stands with their assets, liabilities, and reserves at a particular point in time. Your balance sheet is broken down by assets, liabilities, and equities. Let's start with the assets that include your operating account and your cash reserve accounts. Your operating account is your checking account at the bank. All deposits go into this account and all payments also come out of this account to pay your vendors. Your cash operating account also shows your ability to meet your current operating expenses. Your cash reserves are an interest-bearing money market or CD account designed for reserves. These accounts are readily available if needed. Any other assets for a community are listed under other assets. For example, security deposits that the association will receive the deposit back, or yearly insurance that is paid for in full, and then the amounts are amortized monthly over the course of the year. Liabilities and equities are shown on the bottom section of your balance sheet. Liabilities 2210 are prepaid owner's assessments listed here increase when a homeowner payments come in for future charges. For example, if you receive a December assessment payment in November, and then it decreases when the payments are applied or charged to the account. For example, when the December assessment hits that homeowner's account, then the prepaid assessments will decrease. This is a sample of a prepaid owner's report that you receive in your financial. This report will provide you the owner's name, account, and prepaid balance. The total of this prepaid balance is what we've seen on the previous slide on your balance sheet. Including in your prepaid owner's assessment from the previous slide that are listed under liabilities, you also have equities that include 3,100 homeowner equity. These are funds that your operating budget in the previous years have either been over or short. In this case, the association was under budget, and the board can review the line item and determine if the funds can be transferred into the capital reserves. Capital reserves are funds that the association has saved for major projects and shows how much is available for major capital repair and replacement projects in the near or distant future. Operating current year surplus and deficits are the funds that the current operating budget has either been over or short. Accounts payable shows how much is owed to vendors and service providers. Accounts payable will only show on your balance sheet if your association is on full accrual, in which case you will also receive an AP report in your financial package. If you are on full cash or modified accrual, this will only appear if there's an exception, which would be noted in the details. Comparative income and expense report is my favorite report to run for the association. The comparative income and expense report will inform you how the association is doing compared to budget. This is a copy of a comparative income and expense report. It's also known as the budget comparison report, and it's included in your monthly financials. It shows the current month with the actual expenses, year-to-date expenses, and budgeted expenses and the variance between the two. We're going to break this down a little bit. This is a hard report to see. Your income section on the budget comparison report shows your actual income right here, your budgeted, and the variance between the two for this accounting period. It also shows your year-to-date, your actual, the budgeted amount, and your variance. And then over on the right-hand side, you will also see the annual budget that the board has approved. This section also shows your administrative cost again. Again, it's broken down by the current month, the actual cost, your budgeted amount, and how that variance is. And then it also gives you an overview of what it is January 1st through September 30th, your actual, your budgeted amount, and then your variance. And it also lists totals down below on each expense. This is your maintenance and repair. Again, it's broken down by the current month, budget, variance, year-to-date totals. And if you look here, under general maintenance and repair, our annual budget is only $538. We just paid an invoice totaling $1,527. When you see the variance, it's a warning flag to ask why and dig deeper. It can also allow you to make up any shortfalls quickly so you don't cripple the community's cash flow and vendor payments. For example, if you're spending more on snow removal than budgeted due to an extreme winter, you can do a special assessment right away to cover the shortfall, while it's still cold and owners are more understanding. Also, double check to make sure that this invoice was to be paid out of this line item. It could have been paid out of there and you're actually over budget, or maybe it should have been broken down between two different GL codes. But that's kind of a warning flag to find out why you have such a large variance. This is still the budget comparison report, and it shows your utilities. This is a great tool to keep track of your water and review if you have a water leak or if it's just an increase in utilities, which then you would have to increase your budget for the following year. So you can see here your water and sewer You budgeted 1,400, your actual is 1,472. That's not a huge variance. It could have been that the water rates increased mid-year and you weren't aware of them when you prepared the budget. But that's just something to keep an eye on. Your AR aging report will show the reserved income and the report will show your reserve income and expenses. We're still on the budget comparison report. Your AR report will show anyone that is past due by the current 30, 60, and 90, and any notes if the account is in collection or at attorney, or if a late notice has been sent. If using the AR report in Caliber and use the posting code, it will also break down how your payments are due. Late fees by your monthly assessment. If you have a special assessment, it will break that down to see where your AR is short. The bank reconciliation report is used to prove that the cash assets shown on the association books and the balance sheet agree with what the bank statement shows. The GL balance equals the bank statement plus outstanding deposits minus outstanding checks. Here's a copy of a bank reconciliation report that shows your statement balance. It should always match the bank statement. The last statement balance should always match the beginning balance on your bank statement. And the GL versus balance difference should always be 0. Underneath that, you will find the checks that have cleared and the deposits that have cleared. And then lastly, you will show your outstanding deposits and your outstanding checks. Bank statements are also another tool to ensure that you are not a victim of theft. You can easily see how much money you have in the bank. Bank statements are easier to understand than the balance sheet since we're all used to looking at them, and they show the current amount of money in the bank accounts, recent deposits, and withdrawals. Included in your monthly financial report are the general ledger reports. This is a copy of a general ledger report, and it shows, again, the account number, the debits that were posted to the account, the credits, and the balance of that account. Here's another part of that general ledger report. It can be 3 to 4 pages long, but again, it gives you the account, what it's for, the dates that the postings were done, whether it was a debit or credit, and then your ending balance. This is a general ledger detail report, and it lists every single account you have, the debits, the credits, and your ending balances. The check register report is a listing of the checks and transactions in your community during that accounting period. This register shows the date, the name of vendor that was paid, the check amount, the check number, also which expense account that invoice was paid out of. As a volunteer board member, you only have so much time to dedicate to the operating of your community. There are emergencies to deal with, vendors, projects, and of course, financial and administrative tasks. A large part of your responsibility is your fiduciary responsibility to the community. Overseeing that the community funds are safe and being spent properly is of high importance. To simplify this task, we highly recommend you make sure you review the top 4 financial reports for HOA and condo communities that we discussed today. The year-end reports are provided 45 days after year end, so you should have them by February 15th. They will be provided to CPAs upon request for audit and review if your community is required to have audits and reviews completed, and for tax prep. If a CPA has adjusted entries during the year in year-end reports, they will be reissued after completing the necessary adjustment. The year-end reports aren't generally any different than normal financial reports. They just take a little longer to complete. And if the communities that require audits and review, we generally reissue them after the recommended CPA adjustment entries have been completed. And that brings us to the end of our prepared content. Money is the fuel that runs your association. You need to keep it safe, have good systems in place to manage your finances, use the 4 main reports that will help you know what's going on with your money.
And all right, well, that brings us to Q&A time, which will be moderated by Jennifer Morgan. And before I let Jennifer start with some of the Q&A, I just wanted to say that with those top 4 financial reports are just a guide. If you had less time, that you would take a look at those 4 reports. The reason being is the balance sheet gives you a quick snapshot of how much money you had the prior months at the end, and at that snapshot in time for all of your accounts. Age delinquencies are going to help with your collection process so that you can look at your collection policy and see whether you need to work with our team or your existing team to get those collection activities moving forward. The comparative income expense report is, I think we covered that enough, but if you take a look at that, you'll be able to get a great sense of where your community stands financially. And then the bank reconciliation report is just that safety net that will help you get a feel that what's in the reports is actually real. And I'll share a quick story. I had in a past life, I grew a full service management company in Connecticut. A competitor had stolen over $2 million of funds from the communities. And the way that they had done that was the person did not provide a bank reconciliation report, and there were no bank statements, and the financial reports were made up. And there was no online access to view the bank account balances in a portal or anything like that. So that's why that is a critical report for helping, just to check and make sure that it zeroes out. I want to thank Jennifer and Tanya. That concludes our webinar. I want to thank you all for attending. And if you have any questions or there's any way we can be of service to you, please don't hesitate to contact us. Thank you again, and goodbye.